Hey, my name is James Nicholson, and in this video, I want to talk about interest rates. They're on the rise again, and what does that mean for us as property investors? Now, just in case this is the first time you've come across this channel is all about my investment journey with my two daughters. We've got Georgia, who's 21. We've just bought our first property. We've renovated it. In fact, we're refinancing it at the moment. You can learn all about that on this channel. And we're just buying our second property at the moment, which is going through the legals, which is exciting. And we're buying a portfolio for my new baby, Amelie, who is just 1. So how can you join us on the journey? Take that finger of power, smash that subscribe button over there and hit the bell and see all the good, the bad, and the ugly of property investing. And maybe you'll learn something along the way. Now, interest rates have been rising so far in 2022, and they're going to continue to rise for the rest of the year, if not into 2023. So what does that mean for us as property investors? Should we stop investing? Because let's face it, it's going to cost more money to rent out our properties very, very soon. Well, I don't think that you should panic too much for now, right? And so what should you be doing? Let's talk about various different people and what they should be doing. Now, if you're a first-time buyer, then interest rates are still historically low. They've never been cheaper, apart from a few months ago, but they're still historically low. So the cost of borrowing money is still very, very cheap. Yes, it's getting more expensive, but here's the thing. When you get a deal, you're gonna put it on a fixed rate mortgage for 2 years or 5 years. Now, at this period, I would recommend going for 5 years if you want certainty, because what might happen is the rates might go up in that period and then start coming down when you get to the end of your deal. There's definitely a likelihood that they're going to go up for sure, and we can't be certain that in 2 years they're going to have started going back down. So new buyers or anyone looking for new deals, crack on, get your deal sorted. The most important thing on any property transaction is that you make your money on the way into the deal. So you're looking for deals that are below market value. We got tons of content on that on this channel, but below market value basically means that you are getting a deal. So where might you get a deal like that? You might get someone that's selling in an auction. Investors selling auction, right? People that just want fast money. You might come across someone that is selling a house because they've got another deal that they're getting into. Maybe they're selling the house that they live in to buy another house, and they're in a chain, but someone's just let them down, and so they'll take a lower offer just to get that first house sold, to get the cash to buy the next one, so they don't lose out on their dream home. There's all sorts of reasons that you can get there, but looking to buy below market value is very, very important. So those looking for new deals, my recommendation is that you get a deal and you fix that interest rate for 5 years just to give you certainty. Now, what if you're already an investor and you've already got deals? Well, if they're off that fixed period of time, my suggestion is that you just get them onto a good rate now, because rates are going to continue to rise. You're not going to get a better rate holding out. So get that deal and fix it for 5 years, same as if it's a new deal, right? And even if you had a short period of time left on a deal, so say you had a 2-year deal and you've got 3 months left, it might be worth paying the penalty, figuring out what is the penalty if you redeem that mortgage early and pay it off early, and get on a fixed deal now, because that might save you significant money over that 5-year period. So that's the sort of thing that you should be looking at. Now, are rates going to get out of control? No one can be certain, right? No one can be 100% certain. The goal of the interest rate rises is to curb inflation. And inflation is continuing to rise. It was suggested today that it's at 9.1%, but it's probably above 10% realistically at the moment. So inflation isn't coming down at the moment. But the biggest driver of inflation going up at the moment is energy costs. And they can change very quickly. They were negative. A barrel of oil was negative during the pandemic. So it can change significantly fast. And if that oil prices and everything like that did come down quite quickly, and the actual people passed it on to the market, then we could be looking at no need to continue to rise with interest rates. But what we need to look at and assume as investors is that rates are going to continue to rise, and focus on today. What's the deal that we've got in front of us today? Now, interest rates rising might also cool the property market, and I think that's probably quite likely. And as an investor, that means that there's probably going to be some of the best deals that have come along for a long time that are going to be just round the corner. And so that's an exciting opportunity as well. So what do? Do you buy now, or do you wait for the market to go down? Well, I made a video on this yesterday, and I'm continuing to invest because you just want to get any deal that comes along to you secured and just get cracking on it, right? And so my main strategy that I use is something called the buy, refurbish, refinance, rent. And so I'm adding value to a property. I just bought a 60 grand house, spent 15 or less than 15 doing it up, and made it valued at 100. That's really, really powerful when you do that, because I've built up equity. Now, I'm not really worried about the market declining because I've now got 25% equity in there. I've made my deposit come out of thin air by adding value to that property. Now, I don't really have that concern of, am I going to go into negative equity? Because the last crash was 15%. The one before that was 15%. So that's what we might be looking at. Now, it could be more, but I've still got that 25%. Also, even if the market comes down, I'm not worried about my existing portfolio that's sitting over here, right? And here's why. Because I'm not looking to sell it, right? And so if I've got a 100 grand house and it goes down to be worth £50,000, I'm not bothered. Obviously, I want it to go up in value, but I'm not massively bothered, because what I want to do is make sure that I'm making profit on the rental income, which I will be, because we only buy in areas where we do that. And in the future, that price will come back, right? But the market's not going to crash 50% because the fundamentals are still there. There's still not enough houses. The government haven't built enough houses each year. They need to build 300,000 a year. They're only building around 100,000. So there is too many people that need houses still. And so that means that the market can't crash completely. It could have a temporary blip, which is fine. And so interest rates, they're going to continue to rise. Fix it. That's the message from this video. If you've got opportunity to fix for 5 years, do that. But don't stop investing. Don't stop looking for deals. Don't stop learning about this stuff, because the next few years are going to have some of the biggest opportunities that you can ever imagine as an investor. Anyway, do go and check out all the other videos on this channel. Do give me a quick like on this video if you found this interesting. Comment below, let me know your thoughts. Do you think interest rates are going to cause big problems for investors? Do you think you should secure the rate now or wait for it to come back down? Do comment below and let me know. And join us in our Facebook group. So in the description is a link to join our free Facebook group and just get to know each other that little bit better. I'm James Nicholson. Go and check out this video here. Bye for now.